Hey everyone, and welcome back to Everything Tesla Stock. Tesla's been in the news for the past few weeks. There's always a new headline for the EV company as it constantly seeks ways to improve its market valuation. And now the company's announced a 3-to-1 stock split to increase the stock's affordability. Just like most news on the EV company, this has also led to several reactions among investors and analysts who have revealed scary price targets for Tesla's stock after the split. Artists like Meet Kevin have revealed why they think the stock will hit these price targets after the expected stock split. What does Kevin think about Tesla's stock split? Let's find out. But before we begin, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything happening with Tesla. Tesla recently announced that the company is planning a 3-to-1 split in its stock. The split, which Tesla believes will help to reset the market price of the stock, is going to be voted on by the shareholders at Tesla's annual meeting on August 4th, 2022. And as a result, this has caused several reactions from stock analysts like me, Kevin, who believe that the stock split could be favorable for the company, and may most likely boost its stock performance. Kevin is an American financial analyst known for his huge interest in investments. He believes that the planned 3-to-1 split of Tesla's stock could be of great benefit to the company as well as to investors, since during post-stock split, it is most common for companies to outperform the S&P 500, a stock market index that tracks 500 publicly traded domestic companies in the US. Simply put, a 3-to-1 stock split means that you get 3 shares for every 1 Tesla share that you currently own, and each new share is worth 1/3 of what it once was. However, the value of your total stock does not change. This is usually done when a company's shares become too expensive and unaffordable for an average investor. At the time of this recording, Tesla stock is worth $714. Supposing the price is the same on the date of the split, it means that each Tesla share is actually now going to be worth $238. At a price this low, the stock becomes affordable to more investors. According to Tesla, retail investors have expressed a high level of interest in investing in the stock, and it is believed that the stock split will also make its common stock more accessible to its retail shareholders, so a stock split may be the right move to increase Tesla's investor base. So what does Meet Kevin have to say about all of this? According to Kevin, Tesla's future earnings are much more attainable than most tech stock predictions and sky-high valuations. While speaking on the anticipated stock split, Kevin stated that he is bullish on the stock and he sees this as an opportunity to increase the amount of Tesla shares he owns. No doubt this is likely the thought of most Tesla bulls, since an increase in stock value for Tesla inevitably means more revenue for its investors. Similarly, after attending the Cyber Rodeo this year, Kevin revealed why he thinks Tesla is going to break the $10 trillion market cap within the next 10 years. According to him, Tesla being a robotic manufacturer makes it number 1 in the robotics field, and that makes it the number 1 stock. Kevin expects that the new game changer for Tesla will be announcing 5 to 10 new gigafactories within the next 2 years, citing that Tesla can incorporate a copy and paste mechanism to reproduce more factories globally. Tesla is increasingly repositioning itself as an artificial intelligence company rather than a car maker. Its recent announcements of future plans to venture into AI have been, to say the least, very impressive. Although Tesla is dealing with a lot of pullbacks, and the company's stock may still have a bumpy road ahead of it in the short term, there's still a lot to look forward to. The demand for Tesla's EV is gradually ramping up in China and other countries as well, so any setback the company experiences might just have to be temporary. In fact, Kevin believes that Tesla has supply chain potential and is not likely to go bankrupt. This is owing to Tesla's ability to employ the right skills and education in bringing its new products to life. Talking about Tesla's new products, Kevin thinks that Tesla's robotic humanoid could be another game changer for the company. He further addressed the major concern for this project, which was, for most people, the likelihood of robots replacing humans. According to the analysis, Tesla's Optimus will boost efficiency and allow individuals to engage in more profitable ventures rather than spending time on mundane jobs. Looking at Kevin's analysis of Tesla's future performance, it's actually pretty fair to say that he has high expectations for the company and by extension its stock. Luckily, several other stock analysts have agreed with me, Kevin, that Tesla stock is definitely a buy. Some investment analysis tracked by CNN Money have rated Tesla as a consensus buy, with a median price target of $1,000. In fact, following the stock split announcement in June, 12 out of 45 analysts rated Tesla stock as a strong buy, 12 rated it as a buy, and another 12 recommended holding the stock for the long term. This shows that Tesla's got a high rating among analysts. But why not? The company is constantly performing beyond expectations. In previous months, Tesla's revealed plans to build a highly advanced car model, like the Cybertruck and Robotaxi. And since these are new advancements in the EV industry at large, Tesla may have a big competitive advantage over most other companies in the industry. Tesla's upgraded car models are also stealing the spotlight. The car company sold over 167,572 units of its Model S in 2022, and the Model 3 was among the top 10 best-selling cars of 2021. The EV company's also been employing several methods to boost its market value, and this may see the stock price going even higher in the future. So much that without appropriate measures, the stock may just be beyond the reach of an average individual who's willing to invest in Tesla. Tesla's growth has been impressive, that's for sure. But the company hasn't been immune to the market challenges in recent months. For this reason, making a too high price target for Tesla's stock might not be too ideal, since there are several factors that are likely to not allow for the stock to soar as it should. Kevin also thinks the same. In this tweet, the finance analyst mentioned that everything feels overvalued in the stock market, and a prediction of $3,000 per share post-split in 2024 might be quite unreasonable. What do others have to say? Well, British multinational bank Barclays recently adjusted its price target for Tesla to $370 per share. A Barclays analyst named Brian Johnson raised the firm's price target on Tesla from $325, stating that Tesla's Q2 production and margins may not meet expectations as its Shanghai output recently dropped from 315,000 to 251,000. RBC Capital and UBS also pointed their Tesla stock targets at aiming at $1,100. UBS analyst Patrick Hummel cited three main reasons for this price target. First up, the high order backlog, which is a result of increased production at Tesla's two new gigafactories. Second, Tesla's improving margins driven by increased prices and process innovation. And lastly, the EV company's improved supply chain, which gives it a competitive edge over other electric car companies. He also added that Tesla will experience massive growth and profitability through the production of chips, battery systems, and software. That's something that Kevin might agree with, since the American YouTuber believes in Tesla's potential and its ability to lead its competitors for years. In his recent tweet, the analyst revealed that he has more than 50% in on Tesla in terms of his stock portfolio. Tesla's stock price could be expected to rise after the splits, but this is not always the case. A possible rise in the price of the stock after the split is better determined by the company's fundamentals. Luckily, this is not the first time Tesla is having a split in its stock. The company made a 5-to-1 split back in August 31st, 2020, and the stock then gained a boost in its price after this. Similarly, Amazon's recent 20-for-1 split went down well amongst its investors. Although this is not to say that Tesla's stock price is sure to increase after the split, rather it gives us an insight into what to expect after this coming split. And not to get too excited, but the stock split still needs shareholders' approval to pull through, and a lot can happen before that time. Following Kevin's comment, it's not advisable to put all your eggs in one basket, and it is thus preferable to not make decisions that may plunge one's investment portfolio down to zero. No one can say for sure whether Tesla's stock price will rise or fall after the stock split, but it is safe to say that since the split was announced, it's influenced investors' decisions to buy the stock. What do you think though? Could Kevin be right with his bullish prediction on Tesla? Let us know down below in the comments section, and while you're still here, go ahead and click on one of these two videos on your screen. See you there.